Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Sunday. I hope you're all doing well out here in Northern California, enjoying the nice weather and the different colors of the trees and everything. Today we're going to take a deep dive into my safe deposit account, or the things that I put in the safe deposit. I'm going to go through everything that I have in there as a percentage of the portfolio. So do me a favor in the comments. Let me know what you guys think. Tell me what you think of the portfolio, if it's well spread out, if it's a good mix of stocks, and if you think there should be any changes made to anything. Now, before I get into that, if you guys could do me a favor, I just want to send a thank you to my sponsor, which, as I've said before, is my wife. She's been very happy with how you guys have been doing and hitting that like button and subscribing up. So do me a favor and hit that like button. That's how she determines if she's going to make me dinner. And fortunately, thanks to you guys, I haven't really missed a full meal yet. The first one, she only did half, but the next one, I must have done better, and she seemed all happy, and dinner was good. So again, hit that like and subscribe button, make the sponsor happy, and say a thank you to Lily as well. So let's go into the portfolio, and I'm going to start with the lowest and work my way to the highest. I'm going to rattle through it real quickly, and then I'll go through it again so that we can talk about what my thought process was and where we stand with anything. So coming in at just 0.7% of the portfolio is Loan Depot, ticker symbol LDI. At 0.76 is Penn National Gaming, PENN. At 0.9 is OKLO, a nuclear power company. At 1.1% is Coinbase, COIN. 1.2 is Lululemon, LULU. 1.4% is CrowdStrike, CRWD. 1.4% is Target, TGT. 1.6% Shopify, SHOP. 2.15 is Apple, AAPL. 2.2% is Bristol Myers, BMY. 2.6% we have Disney, DIS. NextEra Energy comes in at 2.8%, ticker symbol NEE. And Palo Alto Networks is 2.9%, PANW. Then we have Pfizer at 2.9% as well, PFE. Caterpillar is 3%, CAT. Microsoft 3.1%, Boeing 3.2%, ticker symbol BA. Cisco at 3.3% in the technology company, not the food service one, ticker symbol CSCO. Intuitive Surgical comes in at 4.1%, ISRG. Google, with the L, not that it really matters, they move in sync, at 6.2%. Starbucks is 6.3% of the portfolio, SBUX. Amazon is 7.4%, AMZN. Chevron is 7.8% of the portfolio, CVX. I have 10.8% of the portfolio in cash, and then the largest position by a good bit is Meta at 16.8%. So I'll go into some of them in detail and what my mindset was and where they stand now and everything else. So Loan Depot at 0.7%. I picked that up partially because I do mortgages myself, which some of you know, but also because they brought over a lot of the SoFi people who have really good technology abilities, and I think they have a real potential to grow. The stock's super inexpensive in some respects, but I also think in time lending and mortgages is going to come back and be busier again, and whenever that happens, I think they'll benefit, and they have a good name in the space. At least that was my thought process in it. Penn National Gaming was just to put a little bit into the gaming industry, and I figure between the casinos and the online that they have potential to grow, and it's a small percentage of the portfolio. So OKLO, which I've talked in other videos about, I put that on very recently, and mainly because the nominee for Secretary of the Energy is somebody who's been on the board of OKLO and has a good amount of stock as well. My thought process there is if they're part of the government and the decision making party, not party, but if they're involved in decision makings for energy, I would hope and I would guess that OKLO is a beneficiary of some of the things going on. Possibly Liberty Energy as well, since I think that he was even higher up at Liberty. I just don't love that they've had decreasing earnings over the past few years, and that's their forecast as well. Maybe they'll have opportunity to turn that around with him being as Secretary of Energy, assuming he gets appointed. But I picked OKLO. It's a small bet for the portfolio, but I also put it in the safe deposit account because it's one I didn't want to trade. I wanted to be in for the next 2 to 4 years while he's potentially in office. The next one, Coinbase, I'll talk a little bit about. I actually bought it a while back, even though it's such a small percentage of the portfolio. It's almost doubled in value. Um, I think it's one of those gambling type of bets that if one day we really tokenize and end up in a position where stocks or other things are on blockchain, it's possible that Coinbase is a large percentage of that and has a real big market share, potentially all of it, where trades go through their center as opposed to anywhere else. I, I don't know that that could happen. I'm not super excited even that it's doubled because my real hope was that it would like 40 or 50x if it really took over market share like that. Next is Lululemon, and I'm kind of kicking myself in some ways. It was near the lows when I picked it up, just because I thought it had finally sold off a little too much, and it's not like the most popular thing that they're talking about on CNBC like they were years ago. I feel like it's fallen out of favor and nobody's paying attention. It finally got to a valuation that I thought it was really fairly priced. However, I thought it would continue to fall. See the wind blowing my hair up looks kind of funny. Anyway, I thought it would continue to fall, so I put on about half of the position I planned to. And when it went up as quickly as it did, I guess I didn't put on the full position I wanted to. I still could in some ways, but it's hard for me personally to add on to things that are already going the direction that I was hoping they were, just because then if it corrects, I kind of kick myself. So I figure I'll have on half the position I wanted to if it continues to go higher and look back and think geez, I wish I really put on what I had wanted to. Now, CrowdStrike's another interesting one. I had bought it in my trading account when the bad news had come out. Not at the bottoms, but on the way down. My brother, who's a financial planner, started talking about it, and really, I thought he made a lot of good insight. So I put on a small position. As it's gone back up, I know me as a trader, I might have a tendency to get out of it. So what I did is I moved it over into the safe deposit account because maybe I got lucky and I bought it at a great time and it just goes higher from here. And I really didn't want to trade around it. And I know in my account, that's what I do. Target, which we all know had terrible earnings and dropped a decent amount. Since it's a small enough position, I really think over the next 5 years, Target will be just fine. I am tempted to add on now that it's had a pullback. It pays an okay dividend, which is now more attractive than it was. And even with the bad earnings, there still seems to be plenty of room to make payments on those dividends. Next on the list is a good example of why I don't have a problem putting a small percentage into something. I bought Shopify a while back, which is now 1.6% of the portfolio, which doesn't sound like a lot as it is, but originally I put only a third of that into the account anyway. I don't know a lot about Shopify. I haven't dug into their numbers, but it does seem like if you want to open an online store, they're a great avenue to use. I like that Mr. Beast actually talks about them, as silly as that sounds, because that's really good promotion. That really encourages them to be able to grow because he has so many followers and so many people watching it. And I'm guessing his fan base is one that probably actually does what he talks to them about doing. And I think they can grow over time. Now, what's cool is if it really continues to grow, how little I put into it, and if it could turn into something that actually matters, that would be super awesome. Apple, on the other hand, which is next on the list, that I have a 2.15% of my position is in, I used to have more, but I sold out of some of the Apple just because I had thought it got so overvalued. Now, don't get me wrong, I'm enmeshed in their products. It's what I'm actually doing the video on today. I have the Apple phone. My son has an iPad. We have the watches. We don't sign up for the Apple TV, but just because we have Netflix and we have Prime and we don't really feel the need for anything else. But I think Apple has a phenomenal product and they're continuing to buy shares back, which could hold the price high, but it just seems a little overpriced to me, which I know my goal is to own the best companies and not pay attention to that. I guess it just got to the point that it was hard for me not to pay attention. Now, Bristol Myers, kicked myself in one respect, which is I had really planned to sell out of all of Pfizer and put it into Bristol Myers. And then Bristol Myers came out with good news and shot up a good bit. And I'm no longer looking at it because I don't want to do it here. I really do kind of kick myself just because I got lazy about it. It wasn't anything like I planned to do it, but I didn't figure there was any hurry or it mattered when. But I did want to actually, I have a little bit of a loss on Pfizer, and I wanted to put that loss into this year's taxes against some of the gains and just move it into Bristol Myers because I look at them as pretty similar. Either way, I've thought about doing it with AbbVie and reinitiating a position in AbbVie, but they still look like a little pricey in terms of price to earnings to me. So for now, I've just kind of left it, and it is what it is. But pays a nice dividend, good company, no issue with Bristol Myers. Next is UPS, which is somewhat of a recent position as well. It's not super recent, but after they fired, I think it was like 17,000 employees and had a couple of bad earnings report, price started looking super attractive to me for the long term. And they're a great company, and I really don't see them going anywhere anytime soon. Now, maybe over time as shipping and logistics changes, potentially maybe Amazon or some of the others take market share and maybe they run into issues. But in the meantime, to me, it's like them and FedEx and the USPS. It's not like I can go to the store and ship through Amazon. They just do shipping of products that I purchase. So UPS I picked up recently. I think they're a good company. Disney is Disney. I've had it for a long time. It's done well lately, but it also struggled for a long time as well. One of those, like, I didn't pick it up at the bottoms, but when I talk about bad news on great companies, I think Disney fits in that realm of being a great company with a great name. Nextera Energy is like my pick of, it was between them and Con Ed in my head, and I try not to spread out amongst a bunch of them. But if I wanted to buy into residential energy, I like Nextera Energy is out of Florida, and I think they're the biggest ones of all of them. And it's also how I kind of came to start learning about Nextera Energy Partners, which let's not talk about them because we've done real bad with them. No, just joking. The reality is I'm not too upset about it. That was in my trading account, and I've let up the position. It's not a major deal. It just I had a really large position at one point because I was overattracted to the yields. Palo Alto Networks. Probably the best of the best. And I actually shaved down some of the position just because, again, I had done well. It seemed like an opportunity to take some off, but it's probably a mistake. I think they really are a great company and one to just kind of set it and forget it, which is why I had it in this account to begin with. Um, been doing great. I hope that continues. And then next Pfizer, which, as I just mentioned, I got no issue with Pfizer. They pay a great dividend. Hopefully, they aren't in major trouble. Hopefully, their pipeline is decent and there's not some big problems that the investors are seeing because they had that guy come in or company come in and they're trying to shake things up a bit. Since RFK has gotten in, it seems like they've gotten beaten up a little bit more. But either that just creates a better opportunity and it's overextended at this point, or they stagger along for a long time, or who knows? I guess we'll see. But I like the name brand and I figure they've been around a long time and they'll figure it out. Next is Caterpillar, which I probably picked up about a year ago or so. Um, I figure they're a moat and nobody can really compete with them. Maybe with the economy slowing down, they don't grow at the rate that they're growing, but their price to earnings seems really reasonable. They pay a small dividend. Just a great company all around. And the more I hear about them, the more I like them. So I don't really see much that I need to do with it. I've thought of selling it from time to time, but then I think, why? It seems like they're doing just fine. Then next is Microsoft, which unfortunately is relatively new because I'm not one of those guys that's crushed on Microsoft, although I feel like I should have. They've been one of the top names for a long time, and I feel like it was a pretty obvious but I bought it around 400 and change. I think that their ability to continue to grow is there because who doesn't use their products? And if they just raise their monthly charges a dollar or two, which I don't think anybody's going to think about for a minute, it actually is a significant percentage to what they charge and can actually grow their earnings pretty well. Boeing, which I've talked about a zillion times on this channel, I think they're a good company having a lot of bad problems, which creates a good opportunity. Not only do I have it in this set it and forget it and safe deposit account, I also have it in my trading account. I really like Boeing. I still think it's a good opportunity anywhere under $150 a share. Maybe the problems get worse. Maybe they collapse. I just don't really think so. Maybe I'm just stubborn about it. I don't know. What do you guys think about Boeing? I know most people seem to hate it, which makes me like it more. And then next on my list is kind of a funny one in my mind, which is Cisco, the technology company, mainly because I'm hoping they end up being like Microsoft. They made those highs back in the internet bubble. They've collapsed. We're talking about 20 years later, and they've just done nothing. Well, my hope is they're beginning to show a little bit of life. I hope nobody pays attention and nobody notices, and I really hope it doubles over the next year or two when finally the news picks up on it because they make good money. They pay a good dividend for where they are, and I'm guessing they're a really good position in the space of AI and everything else that's going on that nobody really pays attention to. Next is Intuitive Surgical, which has just grown to the size of the position it is. It's 4.1% of the portfolio, which I wouldn't put into a company like Intuitive Surgical. But not only did I buy it less than half of where it is now, I've actually gotten out of some of it and it's still 4.1% of the portfolio. Again, maybe one I should just leave alone and let it grow. But it was one of those risky bets in my mind. Like I like the company. I think they're in a great space and could have potential to really grow the way they have. I also think they're extremely overvalued in a lot of ways. So I didn't want to just leave it all in and just let it keep going. So I took about a quarter of the position off, and it's kind of what I moved into some of the other things. Now, Google, Googl, is 6.2% of the portfolio. Um, no plans on doing anything with Google. I actually think the thing going on with the Department of Justice, where the stocks pulled back a bit, probably creates a opportunity to buy more of it. I just have no need to because it's a big enough position in the portfolio already. But it's one of those that I just want to own. Starbucks at 6.3%. Funny thing is, it's actually, I think I'm down on Starbucks still, even though it's finally back above $100 a share. But it's one of those companies that when it dropped down to 70, I picked up a tiny bit more. I wish I had picked up more. And I just think they're a great company that does a good job going through a slow period. If I wait 10 or 20 years, I just think it works out just fine and they continue to do better and better. Amazon, I feel the same exact way. I have no intention of buying or selling or whatever. It's a decent size of the portfolio and continues to grow. And I think they're the best in their field and they have a good, mix of different products. Um, Chevron, the only reason I think I mentioned in a couple of videos why I have so much of a percentage of the portfolio, which is 7.8, is it used to be broken up between Chevron and Exxon. I was fortunate enough to pick up Exxon back like a few years ago. I think it was like $40 a share, paying a 9 or close to 10% dividend yield. And I'm sure they had a lot of problems going on that I wasn't paying attention to. And in my mind, I'm like, well, it's Exxon. What could possibly go wrong? Well, it's worked out well. I split it up a little bit with Chevron. Now it's reversed where Chevron's paying a higher dividend, and at least on social media, it seems like people are talking about Exxon being the greatest thing ever, and Chevron maybe not. And I kind of look at them almost as one and the same. So why not get out of the Exxon, take some of the gains, which is why I want some of the losses, and move it into Chevron and decide what I want to do later. Then cash is cash. It's a large percentage for me. I generally don't have 10% in cash. I try to have less. I like to be fully invested, and I think of that as 5% or less. But I haven't seen anything super attractive lately that I'd want to move any into. And my thought is I might need some of it next year anyway for some of the things I plan to do at home. And then last but not least, which is at 16.8% of the portfolio, is Meta. But keep in mind, I was fortunate enough to buy it when it dipped down to $100 a share. I think my average purchase price is $121. So the reason it's such a large percentage of the portfolio is how well it's performed. And I still believe in Meta. I don't think it's overvalued here. I think, if anything, maybe a little bit plus or minus, but they continue to generate tons of profits, and I think that's going to continue. I also, I've talked about in other videos, I love that Mark Zuckerberg seems to still be driving to grow and be bigger and want to dominate the world. I think that's what continues to make it a good investment. If he was just standing on the laurels of what it is and paying out a bigger dividend and letting it run, I may feel differently. But between the metaverse, the AI, his spending, his concept with the Oculus, I think it's pretty cool to see a company that's still striving to be the best. So I'm not looking to pare any of that down. I do think about selling some calls maybe a year out to collect a dividend, and if they get taken, they get taken, and so be it. But I really have no plans on it outside of that. Anyway, again, tell me what you guys think. Do you think I should make any changes? Is there anything I'm missing? Is there anything I need to get out of? Or let me know. What do you guys have that you think I should or shouldn't? The reality is, I tend to think about having less companies so that I can actually have a better chance of outperforming and really hyper focusing in those top 5 or 6 and maybe getting rid of some of the ancillary ones. So I'm going to run. Have a great day. I'm going to go spend some time with family and maybe go to Costco and do some of those fun things. Since it's in a different area, it's kind of cool to see some of the products they carry out here. Another great company. I would buy more of it. I have a little in my trading account, but 0.0011000%. Anyway, thumbs up, like, subscribe, make comments, and tell me how you guys are doing.